Alright, hello and welcome guys. This is Yasir Khan, and in this video I will be kind of giving you a case study on my first stock investment. Okay, and the reason why I call it a stock investment is because um, I did not buy that stock just so I could sell it later for a profit. Okay, I bought it so that I could bring in the dividends that that company offers. Okay, so uh, for those who are new to the channel, whenever you buy a stock, you're buying ownership in a company. Okay, if it's a huge company, of course, it's going to be a very small piece of ownership, but it is ownership nonetheless. So when I bought this stock, I became a part owner of that company. And it's a multi-billion dollar company. It's called Enbridge. And it's an energy company, basically. But what that entitled me to was dividends. And if I'm not mistaken, they send out dividends every quarter, so 4 times a year. Okay. Now, the reason for me making this video is because a lot of people lose money in stocks because they do everything that an actual professional investor does not do. Okay, so when I started trading stocks, when I started learning how stocks work and how to make money from the stock market back in 2007, I did what every other course told me to do, which was to buy them low and sell them high. And I'm telling you right now, this is the wrong way to do it because no one can really predict the price fluctuations and the trends, irrespective of how good you think you might be in terms of figuring out what the support level is, what the resistance level is. I tried it for a year and a half and I lost money. Okay, the only time when I started making money was that when I bought and held onto the stock for the long term and received dividend payments out of it. So let's talk about Enbridge. Once again, it's a huge energy company, okay, and it's a mature company, and that's why it's giving out it's offering dividend payments. Okay, new companies and especially growth focused companies do not normally offer dividends. Only mature companies offer dividends, and Enbridge has a track record of increasing their dividends every single year for the last 26 years. I think it could be 24 or 26 years, but either way, I mean that's an amazing deal, right? So I waited for the stock price to go down just a little bit so I could buy. Why? Because if I if I can buy at a lower price, lower stock price, I get more number of shares, a higher number of shares for the same amount of budget, right? And that entitles me to a higher dividend payment for the same amount of dollars that I invested. Okay, don't worry too much if it sounds too technical. It takes a little getting used to, but it's pretty simple, I promise you. So at the time that I bought Enbridge, I'm gonna open up the chart. Yeah, I bought it on in April 2018 at around $38 per share. Okay, I went through the numbers. I took a look at everything. I even went through their annual reports. It's a very dry topic, so I don't know if you would want to do that, but I went through and I read 80 to 100 pages. Okay, just to really figure out what the company is doing, where they're investing, if they're investing at all or not, what their long-term goals are, do they have the ability to pay out these dividends, right? And I realized that yes, they do have the ability to pay out the dividends, and they've been profitable for a decent period of time. That's why they keep increasing their dividend uh, payment. Okay, so I bought it at $38 per share in April 2018, and the stock price, I think it went up to $50 at one point in 2019. Okay, but here's the thing, guys, it does not matter what the stock price is. The stock price rarely ever reflects what's going on in the company. Okay, it fluctuates because people get greedy or people get fearful. The market seems uncertain, people are losing their jobs, people are gaining their jobs, so a lot of the stock price, of what happens to the stock price, is not dependent upon the company. At least that's what my take is on it. So it doesn't really matter to me if it went up to $50 per share or even if it went up to $100 per share. My job is to hold on to the stock for the long term because I don't care about the capital gain. I care about the dividend payment, because that's essentially passive income. Okay, I'm not trading my time for money. I did the due diligence once and now I'm good to go. Okay, so at the time when I bought it, the dividend yield was around 6.6%. Okay, I'm not able to see back to the day that I bought it, but it was anywhere between 6.5 to 6.8%. Okay, so let's assume it's 6.6%, which means that it's higher than what your savings account will provide to you if you deposit that money in the bank. Okay, usually it's going to be around 1.5 to 2.5%. Here it was around 6.6%, I'm thinking, but please understand that this can fluctuate depending on when you buy and how, what the price is, and a couple of other factors. Okay, so here are a couple of reasons why I bought Enbridge. Now, the first thing is it's an energy company, right? Which means that it operates in the utility sector, which means that irrespective of whether there's a depression or recession, people need energy, right? People need electricity, gas, water, all that stuff. So this is not something that people can kind of eliminate from their budget if they lose their jobs, because people have to live somewhere. They just have to use energy no matter what happens. They have to use utilities, which means that there is a very small downside to that stock. And I minimized that even further by making sure that I bought near the lower end of the range. So I made sure that I bought where the price was when the price was low, okay, as opposed to buying when the price was $50 a share. I know people who've done that, and they're not really happy about the same investment because they bought at the wrong time. So please make sure that whenever you buy, you are buying at a bargain. Okay, this is very, very, very important. Okay, I think I invested around $40,000 to $45,000 in it, maybe a little more, but because I used different accounts to do it, I did it for my family members. I don't have the exact number, but it was somewhere around that. Okay, and after that, I mean, we started getting dividend payments. To be fair, I didn't even monitor the stock price, because I don't care. The more I look at the ups and downs of the market, the more it aggravates me, the more it makes me anxious, and I just don't want to go through that. So I don't look at the stock price too much. Okay. So yeah, the first thing is that it's a utilities company. The second thing is that I bought near the lower range of the price. And the third thing is that I bought it for the long term. Okay, that's why I can sleep at night, peacefully at night, because it's a long-term buy. I frankly don't care if the price goes down to 30. I don't really care if the price goes up to $100. Okay, if it goes up to $200, I might think of selling it, but not really. Okay, because I always, whenever I make an investment, I try to figure out, is it going to start paying me today? Does it make sense for me to do this today so that I start receiving payments from it? Okay, and secondly, is it a viable investment? Does it make sense? If the economy goes down, if there's a recession, will it still make sense? And for Enbridge, it does, because of the reasons I mentioned before. Now, I did a lot of research with Enbridge just to make sure that my money would not be lost. But you don't have to go through like 80 to 100 pages of the annual report if you don't want to. I think you should, just to get the feel of the company. But if you don't want to, I mean, that's your call. A very good way to find out if a company is worth investing in, is to just figure out for how long they have been paying out a dividend. Okay. Now, if it's over 10 years, then that's a decent company, because they've managed to keep their growth rate going, and they've managed to keep up with the dividend payments. The only exception to that case is a company like Chorus, and I invested in that and I lost a little bit of money, but that's fine. They had, the time that I invested, they had an 18% dividend yield. And I must admit, I got a little greedy, because 80% sounds pretty crazy. I looked at the numbers, I looked at everything, but I mean, there were a few red flags, but I was like, okay, I have to try getting this 18% dividend yield. And I lost like $3,000 on it. It's not really an issue. But what I'm trying to say is that if a company has a track record of paying out dividends, increasing dividends over 10 or 20 or 30 years, then more likely than not, that company is in good standing, okay? Because then otherwise they would not be able to pay out these increasing dividends. It wouldn't make sense, and then the board of directors wouldn't allow that to happen, and then there would be a lot of ruckus within the company. Okay, so yeah, I guess that's pretty much it. Please always look at the biggest companies in a certain market if you want to invest in the dividend stocks, because generally speaking, for the biggest companies out there, they have a huge market capitalization, which means that a lot of people have invested into them. So it's not like that company is going to disappear tomorrow. Now, Enron, that happened to Enron, okay, but that's more of an exception rather than the norm. Of course, you must do your due diligence, but I personally always try to invest in bigger companies because the price is more stable, the dividend payout is stable, and it's just less hassle. Okay, guys? So thank you once again. Let me know if you have any questions. And yes, do Google up Enbridge. Okay, so you type into Google ENB.TO stock, because I'm in Canada. I invested into the Toronto version of the stock market, right? The TSX. So it's ENB.TO stock or stock price, and it's going to give you a chart. You'll be able to see exactly where I bought the stock and how I've been able to benefit from it. I can't even talk today. Okay, so thank you once again, and I will see you shortly tomorrow in another video. Take care, guys.